Bitcoin is a digital currency native to the internet that allows users to transfer money quickly and securely online without relying on a middleman. Its decentralized structure makes it nearly impossible for governments or banks to shut down or stop transactions. But while countries like the US, Germany, and the Czech Republic are exploring adding cryptocurrencies to their national reserves, Poland's central bank has rejected the idea. Why Poland's central bank rejects Bitcoin for reserve. Poland's central bank has ruled out adding Bitcoin to its national reserves, citing security and stability concerns. Its stance aligns with Europe's broader rejection of cryptocurrencies as reserve assets. The NBP is the central bank of the Republic of Poland, Narodowy Bank Polski. Its primary objective is to maintain price stability in the country. This is done by increasing or decreasing the interest rates in the economy. The NBP also manages the country's monetary reserves. It currently keeps its reserves primarily in gold, US dollars, and euros. NBP President Adam Glapiński recently emphasized that the bank does not consider Bitcoin as an appropriate asset to include in its reserves. He pointed to the risk of theft and volatility as the main reasons behind his decision. In addition, he argued that virtual currencies lack guarantees and don't qualify as legal tender. Moreover, the NBP has been wary of Bitcoin's risks since it first issued a warning in 2017. It has stated that digital assets could fall victim to hacking, lack financial backing, and high price fluctuations. The NBP's stance also reflects the European Union's broader rejection of Bitcoin as an investment option. European Central Bank, ECB, President Christine Lagarde slapped down a proposal by Czech National Bank Governor Ales Mikl to add Bitcoin to the nation's reserves. Despite the NBP's refusal to add Bitcoin to its reserves, it may change its stance in the future. The May 2025 election could see a pro-crypto candidate win the presidency and set a new course for the NBP's policy. If elected, Sławomir Mencen would pledge to turn Poland into a crypto haven. Currently, his party holds 18 seats in the 460-seat parliament and has 12% support in recent polls. If elected, his administration would shift the NBP's current stance and introduce a more crypto-friendly approach. In this case, the NBP would be forced to reconsider its position and create a Bitcoin reserve. NBP would also need to rethink its policy towards the other digital assets such as Ethereum and Ripple. These digital assets, however, are not as volatile as Bitcoin and have shown great promise in the future of global monetary systems. Security concerns. The National Bank of Poland, NBP, has ruled out any possibility of adding Bitcoin to its reserves, citing security and stability concerns. NBP President and Monetary Policy Council Chairman Adam Glapiński announced the rejection, noting that the central bank's top priority is to ensure absolute security in reserve assets. Currently, the nation's reserves consist of traditional assets such as gold and US dollars, with a strategic focus on financial stability. While the NBP may not be open to adopting cryptocurrencies, other nations are making their own plans for the future of digital finance. For example, a recent announcement from Satoshi Act Fund revealed that Polish presidential candidate Sławomir Mencen has pledged to adopt the organization's model bill that establishes Bitcoin as a strategic reserve asset for the country if elected. This change in stance could be linked to political shifts in the region. For example, since Russia's invasion of Ukraine in 2022, Poland has stepped up its role on the European stage and is now a key EU ally in pushing for coordinated sanctions against the Kremlin. As such, it is likely that the new Polish leader will want to rebuild Poland's constructive EU relationships, which could make the country a bit more willing to look outside the status quo when it comes to new technologies like Bitcoin. However, the country also faces some real-world security challenges. Despite low crime rates, Poland remains at risk of terrorist attacks and lone wolf hate crimes that target specific groups. Moreover, the current government has been accused of anti-Muslim rhetoric and anti-LGBT sentiments, which could hinder effective protection measures for minority groups in the long run. For these reasons, it is unlikely that the NBP will change its stance on cryptocurrency reserves in the near future, especially given that Poland is a key EU ally. Nevertheless, it will be interesting to see whether the NBP's decision will affect other countries in the region that are considering adding cryptocurrencies to their reserves. If other central banks follow suit, it could mark a significant sea change in the way the world views cryptos. Stability concerns. The NBP's rejection of Bitcoin may stem from stability concerns. According to NBP President Adam Glapiński, reserves must be absolutely safe and stable. As of this writing, Poland's official reserves are composed mostly of gold, US dollars, and euros. Unlike these traditional assets, Bitcoin is not backed by any central bank and is therefore considered riskier than other investment options. Moreover, cryptocurrency markets are still volatile and are susceptible to manipulation. As such, the NBP fears that incorporating cryptocurrencies into its financial portfolio would increase the risk of systemic instability in the country's financial sector. As a result, the NBP is likely to continue with its current policy of rejecting Bitcoin for reserves until the market stabilizes. In addition to financial stability concerns, the NBP also recognizes that digital currencies may be used as a vehicle for terrorism financing and money laundering. As a result, it is important that the NBP monitors the crypto marketplace and takes steps to prevent criminal activity. Recently, the NBP has increased its monitoring of the financial industry in response to rising cybersecurity threats. Specifically, the NBP is concerned about China and Russia conducting propaganda and disinformation campaigns against Poland. The NBP is attempting to ensure that Polish banks are prepared for these threats by increasing their security measures and improving their internal operating procedures. In the long term, it will be interesting to see how the NBP's stance on cryptocurrency adoption evolves. For example, if Jarosław Mentzen is elected as the next Prime Minister of Poland, he will likely introduce pro-crypto policies that will challenge the NBP's conservative stance. Ultimately, it will come down to whether the NBP's security concerns outweigh the country's desire to remain at the forefront of economic innovation. If the NBP can strike a balance, Poland may be able to establish its first national Bitcoin reserve fund in 2025. Political shift. While many countries and central banks are exploring Bitcoin reserves, others remain hesitant. This hesitance stems from concerns over unclear regulations, price volatility, and limited everyday utility. In addition, many central banks are legally prevented from including crypto assets in their reserves. Nevertheless, a number of states and the federal government are pushing ahead with their own cryptocurrency reserve initiatives. Despite these efforts, Poland remains firmly against incorporating Bitcoin into its national reserves. The NBP has stated that it will not consider the digital asset because of its security concerns. The NBP's chief said that the nation's reserves must be absolutely secure, and Bitcoin does not meet this requirement. The NBP's decision to reject Bitcoin reflects a general risk aversion in Europe toward the cryptocurrency. In fact, the NBP's stance is consistent with the European Central Bank's position. ECB President Christine Lagarde has repeatedly dismissed the notion that Bitcoin can be included in reserve assets, citing security and stability concerns. Lagarde's stance is echoed by central banks in other European nations, including Poland and Romania. Poland's refusal to include Bitcoin in its national reserves is a reflection of the country's preference for traditional financial assets. Its current reserve assets are composed of gold, US dollars, and euros, which reflect its strategic focus on financial stability. However, as interest in cryptocurrencies continues to rise worldwide, the NBP's position may eventually be reversed. As a result, if the NBP were to include cryptocurrencies in its reserves, it could potentially spark an exodus of private investors from traditional assets like stocks and bonds. This shift would ultimately hurt investor confidence and increase risks for the nation's economy. Until the NBP changes its position, it is wise for investors to keep their distance from Bitcoin and other cryptocurrencies. Instead, investors should diversify their portfolios with a wide variety of traditional assets. This strategy will help minimize the potential impact of a future political or economic shift that may disrupt global markets and cause a rapid sell-off in cryptocurrencies.